Hello. Boy, as we're 3 months into the new year, we've really surpassed 1 year from when COVID 19 came to impact all of us. And while COVID 19 still is something that we are battling as a nation, we continue to see the light at the end of the tunnel. Now, while we're not fully out of harm's way, more and more of the public continues to become vaccinated, and the vaccine continues to become available for those that want it. Now, with all of that said, let's take a look at what happened in the first quarter of 2021 and then also some thoughts and strategies focusing forward. But before we dive in, I need to share with you some important reminders from our compliance team. So take a quick second to read through this slide and we'll go ahead and get started. Okay, let's dive in. Markets had a mostly stellar first quarter, the Dow Jones cresting at 33,000 points by mid-March. Just to put this in some perspective, and I'll say bring up some memories, whether you want to consider them good or bad, but the Dow Jones at one point in 2020 was below 20,000 points. So we've come a long, long ways. Now, several factors continue to drive the markets upwards. Vaccines have continued to be great news for everyone, obviously, but we started the vaccination process in the United States in December, and that number of total vaccines distributed continues to steadily rise through the first quarter. All of that providing us a good and optimistic news for the markets. More vaccines mean that more people can safely resume their normal routines and activities. All of this leading to more areas around the country, I'll say, lifting what their restrictions are. And some states have completely reopened. All of this, again, continuing to help and stimulate the economy. And then speaking of stimulating the economy, people are also receiving additional stimulus money in which they're able to now go and spend in these states that have been lifting those restrictions and reopening. All these factors are contributing to the optimism for the markets, but there is some negative news that investors should be careful not to overlook. One of the items to continue to keep our eye on is unemployment. Now, weekly unemployment claims have remained kind of around the 700,000 mark since the first of the year. And while we had anticipated for this number to continue to decrease, it's not decreasing necessarily as quickly as we would like it to decrease. Some of the industries continue to have ongoing high unemployment, like restaurants, lodging, travel, and entertainment. The other item to keep our eye on is that the Federal Reserve has reaffirmed its commitment to keep interest rates low. So even as Americans spend this stimulus money and funds that they've received, not only just in this last stimulus check, but over the last year, this leads to an increased potential for inflation over the coming months. So an area here where we want to keep our eyes on it. So what do we want to watch out for in 2021? Well, the biggest news right now is actually the lack of news. And this could be a good and a bad thing, right? We've gotten additional stimulus and vaccines are continuing to be distributed. But right now, there's not a whole lot of news that is coming out. And like I say, this could be a good or a bad thing, especially when you're dealing with a touchy market. So news that comes out, if it's negative news, could impact what the markets might do and impact us from continuing to hit new highs. For example, the VIX, which measures the amount of volatility in the markets, that is the volatility being the huge up and down swings in the markets. Well, as you can see here, this has steadily decreased since March of 2020. However, negative reports on things like unemployment or vaccines or rising COVID cases, inflation, or other policy areas or taxes from the new administration could lead to an increase in market volatility. One of our responsibilities is to look at all situations and provide guidance with thoughts, ideas, and strategies. So let's just take a look at a few of them. First off, as the markets continue to reach and look at new all-time highs, it's really important to understand what is your time frame, meaning how long do you need your money to last, and where are you at in life? Meaning, are you in retirement? Are you nearing retirement? Are you going to need a portion of this money that you're saving up to supplement your income? And if so, it's really good practice to continue to look at the balance that you have in your portfolio. How much do you have on the growth side? And how much do you have in that safer side? I like to call the war chest. So if there is a market correction, you have that war chest or that safer side in place to help you weather the storm. One of the important factors to have in place is an income plan, and that will help you determine what a comfortable balance might be for you. This is also a really ideal time for investors to re-examine their core investing philosophy and strategy. Great quote here. The individual investor should act consistently as an investor, not as a speculator. Well, what's the difference between an investor and a speculator? And I think this is really important for all of us to remember and think about, is that in the event, again, that you're nearing or in retirement, how long do you need this money to last? And it's quite possible that you may need it to last for 20 years, 30 years, or even longer. So what's the key differences here? Well, investing is generally the act of buying or holding an asset for the long term, whereas speculation is typically taking high risks that can include trying to make big returns over a short period of time. And while sometimes that may happen, sometimes that can also fall flat or could cause some major losses. That's why we continue to recommend a long-term focus when it comes to your overall portfolio and when it comes to your plan. So your best course of action right now, would that be? I would say it's to stay vigilant, the pandemic is going to continue to be a factor in the second quarter, although signs do continue to point to recovery by summer. However, we have to keep in mind, again, inflation concerns and any missteps around reopening that could potentially cause that volatility and any sort of market setbacks. So, although markets are soaring, last year's market drop was a painful reminder that things can shift quickly. Depending on where you're at in life, if you're 10 years away from retirement, 5 years away, or in retirement, finding that balance between growth and safety in your portfolio is a key component in helping your money to last through your future and through your retirement. Just remember, I'm always here to answer any sort of questions. I'm cautiously optimistic about the next quarter, but I also want you to be prepared for whatever may happen down the road. Thanks, and have a great day.